Hey there, Kim here. In today's video, we're going to be talking about the $10,200 that you don't need to pay taxes on. I'm going to go over how much of a refund you could possibly receive, as well as when you can expect to receive this payment from the IRS. And in case you are not aware, if you were collecting unemployment for the year 2020, you do not have to pay taxes on $10,200 of the unemployment that you received, which can be pretty significant. Now, if you and your spouse were collecting unemployment, this applies for both of you. So you could, in actuality, as a couple, not have to pay taxes on $20,400, which again could be pretty significant. Unfortunately, not everyone qualifies for this. If you are a couple and your AGI is $150,000 or above, then unfortunately you do not get this benefit. So if you already filed your taxes for the year 2020 before the bill was signed, you don't need to take any action at this time. The IRS will automatically file an amendment on your behalf, which is pretty cool. Now, if you haven't done your taxes, then if you use an external software like TurboTax or TaxAct, or if you go to a tax preparer, then obviously they should already have this information. But most of the software, or I'm sure probably all of the software now, is already updated to not include the $10,200 that you have to pay taxes on. Now, I do know that if you already did your taxes using TurboTax, I have heard from a couple people that if you go and look at your 2020 tax return, as you're logged into TurboTax, then you should see that amendment already applied. And again, I've heard this from some people, not from others, so maybe they're just rolling it out in groups of people. But you definitely want to check out your most recent tax return if you already did file for 2020 and you used a software to do it. So now I'm going to talk about when we could possibly expect this refund or credit to apply. So this is per the IRS.gov website, so definitely check out the link in the description if you want to access this website on your own. But it says, because the change occurred after some people filed their taxes, the IRS will take steps in the spring and summer to make the appropriate change to their return, which may result in a refund. The first refunds are expected to be made in May and will continue into the summer. And I know we've seen everywhere on YouTube and online that this would be done in May, but that's all I heard. I hadn't heard anyone actually talk about the fact that it could take until summertime until we see this refund take effect. So obviously want to let you guys know that. For the taxpayers who have already filed and figured their tax based on the full amount of unemployment compensation, the IRS will determine the correct taxable amount of unemployment compensation and tax. Any resulting overpayment of tax will be either refunded or applied to other outstanding taxes owed. So if you already owe the IRS, they're just going to take that money and, apply it to what you already owe. For those that have already filed, the IRS will do the recalculations in 2 phases, starting with those taxpayers eligible for up to the $10,200 exclusion. The IRS will then adjust returns for those married filing jointly taxpayers who are eligible for up to the $20,400 exclusion and others with more complex returns. So it seems as though that the tax returns they are going to work on first are the simple ones. And then, so if you have a complicated tax return, who knows, how do you define complicated? I'm sure we can probably do that. But, maybe if you sold a house or if your spouse has a business or whatever. But it seems as though if your tax return is pretty straightforward, hopefully you'll receive the money by May. If not, soon thereafter, but at least you know that your tax return will be on the forefront of getting it looked at first. So now what I want to do is talk about how much money you could expect to see as a refund if you are in fact due a refund. So what I have up here are the tax brackets for the year 2020. So, and again, here is for single filers, here is if you are married, and then of course over here we have the tax rate. So we really only want to focus on the top three sections, the 10%, 12%, 22%, because if you make any more, then you're not even going to qualify for the $10,200, not having to pay taxes on that. So first, what you want to do, if you are single, you're going to look here. If you are married, you're going to look here. And what you want to do is find out your AGI, your adjusted gross income, and then find it on the chart. Now, when you find your amount on the chart, so say I'm married and I make $40,000, then I would look over here at my rate. So then what I did was I did a couple little calculations, and depending on the tax bracket would depend how much money you could receive back. So if you fall in the 10% tax bracket, then you are looking at a refund of $1,020. If you fall in the 12% tax bracket, you are looking at saving $1,224. And then if you're in the 22% tax bracket, you're looking at saving $2,244. And of course, I do want to specify that this is not a guaranteed refund. It's definitely money that you are going to be saving on your tax return. But obviously, there's so many things that could depend on the amount of money that you receive with your deductions and how much money you already paid in to unemployment for taxes and all that stuff. But bottom line is these amounts here are the actual savings that you will save on your 2020 tax return. So, hey, it's a pretty significant amount of money. So that's all I wanted to cover in this video. If you want to see the IRS.gov resource as well as this the tax bracket for 2020, definitely check out the description below. Hopefully this video was helpful. Thanks for watching, and I'll see you on the next video.